Welcome to Exchange Rates UK TV. It is the 24th of August 2021. Looking at Ethereum here, 1:40 p.m. Eastern Time. It is down a little over, it was down just 4%. You have Cardano has been down as much as 9%, and you've had Bitcoin down as much as 3%. So a little bit of a dip here going into the trading day. And this is coming as, Ethereum's had some pretty congested trading ever since the 8th of August. I guess we could say, yeah, the 8th of August. There's been a pretty tight range here traded, and we're seeing some regular bearish divergence play out between price action and the RSI, but really not a ton of responsive price action related to that. And then you look at the current daily composite index that has moved down lower as well. And it's crossing below its fast-moving average, so that could be a little bit of a warning sign. As far as, are we going to see a big drop here? That really does remain to be seen. If we look at the volume profile for 2021, and pull that up here quick, and it's going to look a little odd because this is a logarithmic chart. But for 2021, the volume point of control is all the way down at 1,000. We'll just say 1250. And then when we look at the current price action, I mean, there's a pretty thin volume profile compared to what's down below, where the top of that node is at 3,000. That's not much of a price range. That is right where the Kijun Sen is at. But the fib retracement from the current swing, from this swing low to the strong bar of the move on this daily chart, we see a little bit of a different kind of action here. I mean, if we assume that 50% retracements are the norm, then we're looking at a move back down to the 2450 value area. Again, how likely is that? Remains to be seen, because the consolidation up here and the support found against the Tenkan Sen is very strong, and it is set up for a possible breakout if any bullish sentiment does return. But I mean, do note that, as the consolidation has formed here, if you look at the volume down below, it has decreased a little bit, with the exception of yesterday. We saw it spike up, and if we see more spiking today, a rise in volume in a consolidation area, especially after it's been in a consolidation range already, a spike in volume generally occurs prior to the bullish breakout or bearish breakout, depending on which way it goes. But as far as the bias one would look at here, this is a continuation pattern, and there's a couple ways you could draw it. This looks like it could be a diamond top, kind of an oblong diamond top, or it's just a bull flag. Pretty well established support and resistance zones by the bodies of the candlesticks, and the RSI is technically in neutral territory. Composite index is kind of got a bearish move there, but all in all, I mean, it's fairly neutral here. You've had continual support up against the bottom of the cloud. The only thing that we could probably take a look at here is the point figure chart, which might give us a little bit more detail on what to look for, because it kind of filters out a lot of the noise by recording only price. So I've pulled up the $50 3-box reversal chart for Ethereum, and right away this looks kind of ugly for a couple reasons. First is there's a triple top that failed to break out. Instead, it broke down lower, and then we retraced. Okay, but then we pulled back again. Now we have this quadruple top with a breakout entry that at 3350 that never amounted to anything. Okay, so this, to me, looking at it this way, looks very weak on the bullish side. This does not look like there's a lot of conviction for people to go long. If it comes down to 3,100, that'll be the break of a double bottom, which by itself isn't really that much of a signal. But if it's a double bottom break, but because there was a quadruple top that had a buy signal that failed to generate any movement, that creates a bull trap pattern. And so the bull trap pattern is one that we measure, and because it's more horizontally constricted as opposed to, we have to use a horizontal profit target method, and we do that by measuring the number of columns. We multiply that by the box size, and then we multiply that by the reversal amount. We take that number and then we subtract it from the high of the X column in this horizontal, which would be here. We subtract it from that, and that would give us the value of, that would bring us to this type of setup here. So there's 12 columns in this current range. Multiply that by 50, that's 600. Multiply that by 3, that's 1800. Subtract 1800 from the high of that horizontal range. Brings us all the way down to 1500. Actually, it's 1550. Let me change that. So does that mean we're going to go down that far? No. But it should give you an idea of how deep of a retracement one could expect from that entry if this is something that plays out. And you can kind of get an idea by using some fib retracements. So if I just want to do kind of like a rough estimate, I mean, if I'm going to look at even 50% of the move brings me back down to 23.25, which is still a pretty good drop from where we're at. But again, this isn't suggesting that we drop down all that way in one fell swoop. Certainly, it wouldn't be out of the ordinary for that to happen, but that is just the kind of zone to look at moving forward. I will note, though, that if we do reverse higher, we do form a new double top. That will be a catapult pattern, which is extremely bullish, and there would be a very, very easy move to 5,000 if that were to happen. So just keep that in the back of your mind too. But for right now, it looks very much like it would continue traveling south here, and that's what I would expect. Thank you all for watching. From All the Shit Exchange Rates UK TV, please don't forget to like and subscribe.